Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, we're just coming off a contentious election cycle, which leads to policy uncertainty. The markets hate the unknown, which leads to market volatility. Investors have a tendency to focus on that market volatility and things they can't control rather than focusing on the things they can control. Let's talk about the things people can control.
So portfolio-wise, one element within your control is just your asset allocation, right? Calibrating the balance between the risk you're willing to take versus the return you aim to receive. But I would argue that over time, your financial plan is far more dependent on how much you spend versus how much you save.
There's an old saying, Travis, and everybody knows it. Pay yourself first, right?
Correct. And if you're a great saver, you can be an average investor and still achieve your goals, in my opinion. But if you're a terrible saver, even being a great investor isn't going to make up for that lack of saving over time.
You're right. The earlier you get a plan in place and you start saving, the better you can navigate and the better opportunity you have for success.
Right. The earlier you start and the longer you allow compounding to work its magic, the better off you're going to be. Probably a little known fact is that Warren Buffett accumulated the majority of his wealth after age 55.
That's amazing.
That's an extreme example of accumulating an asset base early and allowing compounding to work its magic over time.
Absolutely. Travis, this has been great, and I look forward to it next week.
I look forward to it as well, Steve.
If you feel uncertain about the markets or your financial future, our contact information is below, and we look forward to hearing from you.